Hello, chart watchers and Decision Point faithful. Welcome to this March 29th, 2021 Decision Point show. I'm Erin Swenlin. My father couldn't join us today, but we have lots to talk about. I want to get you all prepared for the week ahead. There are a lot of interesting charts out there. I've got something special up my sleeve for us today. But let's go ahead and look at our agenda for the day. I'm going to, of course, do our SPY overview. We'll look at some of the decision point indicators and give you an idea of what the market is doing and what the market will likely do based on those indicators. I'm going to cover the big four: dollar, gold, oil, crude oil, and bonds. And additionally, we will look at gold miners. I want to do a sector overview. I want to show you those sector charts that we have and really delve into the indicators that are under the surface so that you can see what we're seeing as far as sector strength and the live scan and sift. So I did not do decision point diamonds last week, so I didn't have a diamond of the week really ready to go. So what I thought I'd do, I think will also be very interesting for you, is I'm going to do a live scan, and then I'm going to show you how I look at the results and sift through them, and that will give us our diamond of the week. So you're going to get to see that all live and how I do that when I prepare to write my decision point diamonds reports. The sectors currently are all on buy signals in the intermediate to long term. This is based on our intermediate term trend model and long-term trend model. It means when it's on a buy signal for the intermediate term trend model, it means that the 20-day EMA is above the 50-day EMA. It's on a silver cross, as we like to call it. The long-term trend model, if the 50-day EMA is above the 200-day EMA, then you're going to get a buy signal that way. And we consider that a golden cross. I think most people are familiar with the golden cross. So just to give you a little insight when we get to our silver and golden cross index charts, that will give you an idea of what I'm talking about. Well, speaking of charts, let's go ahead and get started and find some great charts to look at. All right, so I'm going to start off with what happened today in the SPY. On the right, I have a 5-minute candlestick chart. So this gives us really the gyrations that the market went through today, and may give us a hint of what to expect going into tomorrow. And the two that I paid most attention to here on a 5-minute candle are the RSI and the PMO. And at this point, we had what I would consider a buy signal or a buy point right here when the PMO had crossed above the signal line. And then at the same time, we had a positive RSI. So that signal came in right about here. But of course, the next thing you know, momentum shifted, the market started back down, and now you can see a very clear textbook double top formation on this very short-term chart. I haven't looked at all the indicators yet because they're now just going final. So we'll have to see what the indicators are suggesting based on today's market behavior. But this is something we should keep in mind, this double top that has formed on this 5-minute candle. Let's go over here and look at the daily chart. And as you can see, price is really having difficulty with making new all-time highs. It looks like it failed once again today. And this is that important area of overhead resistance. And you can see that it was kind of a muddy, swampy move because we had this area right here between this top and that top that formed some very strong overhead resistance as we popped out of the short-term declining trend. So at this point, it's looking good. We've got a positive RSI. The PMO is on a buy signal as of, I think, yesterday or Friday or today. I'll have to double check that, but I think I put it in as a buy signal for today. But I don't know. When I look at this chart, I don't have confidence that we're going to break out to new all-time highs. Right now, the VIX is starting to head back down. The good news is it's still above its EMA on this log scale that is inverted, because overbought we like on the top and oversold on the bottom. I think I've gone through this many times before. So what we're watching for is when the VIX gets to these really low readings and people have gotten more complacent, that's when we start looking for reversals. So at this point, we are managing to stay above that EMA. And typically when you're above the EMA on the VIX on this inverted scale, you're going to see less volatility and generally a nice upswing. Now, we didn't get that here. We've been above that EMA, but we really spent most of that time in a declining trend. So normally I would look at this as a very good strength, but at this point, I'm not feeling as confident about it, just based on the behavior that we've seen with the market, even though that VIX has been above its EMA. All right, here's the 1-year daily of the SPY, just to give you another peek at what I've been looking at. We have a rising wedge, and this could be considered in the intermediate term. More so, you could connect these two lows here, and that would give you what I believe is already on that chart. Nope, we don't have it on that chart, but it would give us a rising wedge in the short term as well. Rising wedges are bearish patterns, so the expectation is a downside breakdown. So, at this point, the market's been able to hold that 50-day EMA. We stretched out below it, but held on to some support right here. And now we're struggling with this overhead resistance. Let's look at what some of the indicators are telling us right now. And hopefully they're all up to date, but sometimes they don't get up to date before the show. All right. So here is our short-term climax chart, and what I'm seeing right now that caught my eye would be the increase in new highs. We're still seeing a lot of new highs being made, and despite that, we do have negative advanced declines and advanced declining volume, but they aren't what we call climactic. They haven't gone through the outside of the range. So at this point, we didn't really have a climax day. I would take the fact that we had these new highs like this matching pretty much what we had last Friday. I would take that as a positive going into tomorrow. But let's see what happened to our Swenlin trading oscillators. I hope these have updated. Yes, they have. All right. So the Swenlin trading oscillators, I'm going to add the Zoom thumbnail here on the side. I'm just curious if this turned down, but it looks like it's probably about the same reading as it was on Friday. So the Swenlin trading oscillators are still rising. They're certainly not overbought. And you can see participation here. The percent of stocks above the 20-day EMA have really made a nice move to the upside. We have over 83% of them with their price above their 20-day EMA. And then even when you come down here, 68% of the S&P 500, 68% of them have rising momentum. So that's positive as well. It's not completely overbought. It is starting to get into that overbought area. But right now, this chart is telling me we might be able to eke out some more upside. Of course, we closed slightly down today, but there is some, I would say on that chart, we have some encouragement. Let's put it that way. Looking at our silver and golden cross, as well as the bullish percent index. Like I said earlier, this is going to measure how many S&P stocks have their 20-day EMA above their 50-day EMA. So silver cross, 20 and 50. And then the S&P golden cross index measures how many have their 50 above their 200-day EMAs, and that is a golden cross, of course. So right now we are looking at a reading, the highest since we started tracking this particular indicator, which goes back to 2017. So we now have the most overbought reading for the golden cross index. I was very concerned because we did have a negative divergence going on here. You can't see the left part of this, but it was higher. And we had that divergence going into those all-time highs. And I really thought that was going to be the end of it for the market, because this is something we don't see often, and we had seen it right before the bear market decline. Not that this was saying we were going to have another bear market, but certainly the market is due for a strong correction, and we haven't had that yet. So overbought readings here, while it's positive in that the foundation of the members in the S&P have long-term trend model buy signals, that's a good thing, but it is getting extraordinarily overbought. We see the BPI had a positive crossover, so I'm liking that. That looks pretty good to me. And the SCI, the Silver Cross, has now gotten rid of what looked like a negative divergence when we were moving up this way, but now it's made a higher high than from back here, so we don't have a negative divergence to really worry about this week. We were very concerned about it last week because we had gotten that top and it was forming that negative divergence as we made those new all-time highs. Don't want to see that. Looking at our intermediate term indicators, and these have been updated, although this has not. You know, it's been very interesting because now we're starting to see a divergence between the ITBM and the ITBM. So this is the breadth component, and this is the volume component. So we're not seeing volume really confirming what's going on, but we do have, as far as breadth goes, we are seeing the ITBM rising. So it's kind of you know, we're seeing two different kinds of looks here on these indicators. What I would say is, you know, seeing that they don't agree with each other, that tells me there could be some problems under the surface. And then when you look over here at the readings currently for that ITBM, it is still rising, but it's now gotten into very overbought territory. So we'll be wanting to pay attention to that. About half of the members as of Friday, like I said, I don't have the numbers for today, but 50% of the S&P 500 had crossover buy signals, meaning the PMO was above its signal line, and that's the way it looks on half of the charts right now for the S&P, which is not bad, but certainly you want to see a bit more participation as far as buy signals if you're going to continue higher in the intermediate term, which is why it's on that chart. Quick peek at Bitcoin. Bitcoin has been forming a rising wedge of its own. It came and tested the 50-day EMA and tested the bottom of this wedge and now is headed back up. It still hasn't broken its declining trend really, and you could make a case for a bull flag here, but I think that really when you look at this, the outstanding chart pattern is that bearish rising wedge. And the question will be, can Bitcoin break out of this short-term declining trend? And if it does, we should expect it to get to higher highs, new all-time highs, because it'll want to test the top of this rising wedge. But this is a dangerous formation, so we need to be careful here as far as Bitcoin. You can also see that the PMO, it is decelerating, but it is still on a sell signal currently. All right, let's look at that big four, dollar. Right now, when I look at that 6-month chart, and I'm going to be talking about all of these charts in the DecisionPoint alert tonight. Those are our publications. I'll talk briefly about that. But right now, the 6-month chart, we do have, like I said, that short-term rising wedge, which implies that we're going to be seeing a turn to the downside. It's still struggling. UUP is still struggling with overhead resistance right now and at the 200-day EMA, which is a problem. But you can see that we still have a positive RSI that is not overbought. And you know, you just can't beat a PMO that is accelerating upward with this particular rally. So everything that I'm seeing here tells me that the dollar is going to break out here above that 200-day EMA, but we'll want to keep tabs on this rising wedge formation. It's getting stale because price is getting very close to the apex. So it may run itself out just by a continuation of this rally. And I have to say it does look pretty good. You could see a double bottom on that 1-year chart for the dollar. So we are getting the breakout, and it suggests that we'd have an upside target right here at about $25.30. And that's what we're watching right now. Gold. Well, we were kind of happy with gold in that it didn't completely break down last week. It just pretty much consolidated out of the rising trend that it had formed. But then today, of course, we had a breakdown from that little area of consolidation. So really, you've got a topping PMO now. The RSI never got positive. And we are seeing a little bit of you can see a declining trend, if you will, on the discounts. And so usually when you get those bearishness of a lot of discount for the Sprott Physical Gold Trust, that usually is a good sign, but we're paring them back. You can see discounts are getting a bit lower overall, and that is not helping gold. It just means that everybody's bearish, and they're not bearish enough to look for a reversal just yet. And let's just look at the dollar gold chart real quick. And there you go, same thing. We have that PMO turning over, 20-day EMA posing very difficult overhead resistance. At this point, it really does look like gold is going to make a trip down to that 1675 level. And, past that, if we get the bounce, this is looking really far in advance, but if we do get a bounce once it gets down here, that would set up a really nice double bottom formation. So this could be a very constructive pullback and more than likely rally. We'll have to see that. We don't want to over anticipate. So gold miners have been struggling because gold is struggling. And while they're not completely tied to each other, certainly the price of gold does affect what's going on with gold miners. So if gold is rising, that kind of puts the wind at the back of our gold miners. So really, we have a positive falling wedge. We had the nice rally and then a pullback, and the pullback did not take price down to this support level before it started back up. And I think that is positive for gold miners. I'm waiting for the breakout from this falling wedge. The 20-day and the 50-day EMA, as well as the 200-day EMA, are going to be difficult for price to break through. But let's look under the surface here. You have an improvement. Of course, this is from Friday. I don't have the updated numbers. That will be in our decision point alert tonight. But you can see that gold miners were already starting to come back to life. We were starting to see more stocks improving with their price getting above their 20-day EMA and above their 50 and above the 200 now. You can see that golden cross has been trending upward. The PMO is a little bit of a problem, but it still has not had that sell signal. And if we can get this rally to get going here on gold miners, that PMO will certainly bring it on up above that zero line. All right, USO. Oil, has been faltering, kind of a back and forth over the Suez Canal issue, over a lot of different things. It really needed this heavy pullback, which it got, and now it's just sort of struggling with whether it wants to resume the very strong rising trend that began back at the end of October. It looks pretty healthy. I mean, we're getting this movement. It's testing that 20-day EMA. My expectation is that we will see it move higher. PMO isn't confirming that hypothesis, if you will, but the RSI is now positive. I think this looks pretty good for oil right now. And looking at bonds, of course, rising yields have really hurt the bond market. TLT is no exception. We did get a buy signal. We had a nice rally here, but 20-day EMA posed as difficult overhead resistance, and now price is falling back down. We had noted, if you look down here, this is the 20-year Treasury yield. And we noted, Carl wrote an article last week about how yields had lost that support level. But as you can see, they are starting back up. This was as of Friday. We'll have to see if, my guess is because bonds were down by almost 1%. I'm guessing that yields did manage to break back above that area of overhead resistance. That covers our big four and that review. So let's go and start doing our sector review. And this is really how I start my live. I'm going to start the live scan and sift. Because the first thing I do is look at the sector summary, look at my charts for DecisionPoint, our sector charts. And then that's when I start to determine, when I get my scan results, where am I going to want to zero in? So right now, I'm going to put up the candle glance, which I love, because I have it as a 6-month and I have the PMO on here with those EMAs. So just looking at the PMO, XLC, not anywhere you want to be near. That's not doing well, in financials are certainly starting to struggle. And, you know, other than that, we're seeing some pretty good action. XLE is also having some issues. What are the ones that really interest me right now? I am interested in the ones that are changing their character a little bit here. We have some utilities, healthcare, all of these have been on buy signals and they're doing quite well. The ones that are interesting to me are industrials and materials, because we had lost momentum here, but it's getting picked right back up, and that suggests internal strength to me. So this is where I really want to concentrate, and honestly have been concentrating for quite some time. These two areas have just, well, you can just see the rally on those two areas out of January, the end of January has been pretty impressive. So I am liking these two sectors right off the bat. So let's go back. Just pull up a chart so I can get to where I need to be. I'm going to pull up our sector charts. These are available to our members, and Carl keeps them annotated. Pretty much he takes a quick peek at them every day and updates those annotations for you. So this was XLC. Remember, this is not anywhere that I'm interested in. You can see, though, that it has bounced off some very strong support of the 50-day EMA and the lows back here, as well as that top from January. So this could become interesting. But right now, I don't think I want to fight the PMO and that negative momentum. So let's go to XLI, because that was a place I was interested in. And let's see what's going on beneath the surface. You can see that bounce of the PMO above its signal line, which is especially bullish in my opinion. You had the breakout and close right here on Friday. I believe that was an all-time high. And we did pull back just slightly, but overall, you know, the intraday high did continue this rising trend for us. So I like that look. And then if you look under the surface, we can see the strength where we have the majority, in fact, almost 96% of the industrials have their price above their 20, 93% above their 50. Now there's the warning there that this is, well, overbought, but at the same time, you do need this kind of strength in order to continually rally and keep it going. So I think under the surface, XLI still looks good. It's just a little on the overbought side. And materials, which did pull back today, look at the indicators under the surface here. The improvement as far as participation goes, 100% have golden crosses. And the silver cross is rising. It's not as overbought as it can get that we've seen, but look at that beautiful BPI positive crossover. So I'm really liking those two sectors. So let's go ahead and do a quick scan. And hopefully we'll come up with some good candidates here. Now, this is my Diamond PMO scan. This one is available on StockCharts. I wrote an article about it. If you want to just come over to our DecisionPoint site, you can come in, and I believe you can make a free subscription for yourself. But even if you can't, anything marked free, you can read. And over here, there's the link to my article about this PMO scan. But let's see what we get. I have no idea because I haven't run it yet. So we only ended up with one. It is in the healthcare section. Usually when I get one, I'm always surprised if it actually looks good to me. I'm looking at this chart though. This one actually does look pretty good in medical supplies. I like the breakout. It pulled back, but it held above support right here. Positive RSI, not overbought. And of course that PMO rising and getting ready for a positive crossover. What would prevent this from being a diamond for me though, would be this negative divergence on the OBV with the price tops. So this one would not be included. So let's go find a scan where I should get a lot of results. There we go. All right, so I'm going to save this. And we should get right on through here very quickly, because honestly, once I get these, I do scan very quickly to sift through them. So what I like to do is I put it on Candle Glance, you'll recognize that. And I start looking for the things that would interest me, being chart patterns. All of the PMOs are going to look pretty good because of the way that scan works. I'm looking for pivot points, breakouts. You can see ADP had a nice breakout. This one, Brookfield Assets, looking a little interesting that way. So you can go through and just immediately start looking and seeing what ones have that setup that looks really good. Cantel Medical Group, this looks really interesting to me. We had a double bottom here, a nice bottoming formation. Look at the PMO is very strong. And you can see as far as price relative, it is performing slightly better than the S&P. So there you go. It's in healthcare, not what we were looking at before. But I think that this one looked pretty good as a possible diamond of the week. So CMD, Cantel Medical Group. And let's see what else we can find. Oh, there's some very nice breakouts here all over these charts. Some that are a little bit too much for me. So I want to find something that you can see right here. It's just been spending too much time. The rally is likely over. It could be a flag and moving higher, but I just don't want to see a PMO that's that overbought. This one looks interesting. The PMO looks like it's about ready for a crossover, but we do have this trading range and no breakout yet. So not interesting. We'll move forward and we'll find us another diamond of the week. JB Hunt looks interesting with that breakout and the PMO turning up above the signal line. Kind of prefer one that maybe isn't quite so overbought. Let's go through here. That looks very interesting. Keysight Technologies. This is in technology. I would just caution you on that one because it does lead the market. But look at this really positive looking chart. It's been doing recently well against the S&P. It's doing really well against its brethren. And the RSI just got positive breakout right here. So this one would be a very interesting diamond of the week as well, KEYS. So we've got a couple of them. Now let's go and look. I want to view all of these and let's look at them as far as what sectors so that we can find a good sector and then we will close this out. All right, so I'm just looking at it based on sector, and industrials were very interesting to me, as were materials. So I'm going to look in here. Let's see, General Dynamics. Let's see what that one is looking like. Really nice move. You can see the PMO turning up above its signal line. Little overbought on the RSI, something to pay attention to. And it's doing very well against the S&P. The only thing is it's only performing about as well as its group. There might be an outperformer out there. So that gives you that way that I go through and scan and find my diamonds of the week. We did have two that I was looking at, CMD and Keysight, KEYS. And that's all I have. Hope you enjoyed Decision Point today. Happy trading.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.